All right. I hope that everyone is doing very, very well today. I think we are good to go. I'm just going to check the audio so we don't have any issues. Okay, perfect. I can hear it. So I think we're good to go. Let me just pop this comment section out. We should be all set. Okay. So real quick, we're going to go over the market, and then we're going to be going over value area highs, value area lows. I'm going to pop out the chat, and then I'm going to just share this link on Twitter, and that'll be it. So give me just a minute here to get this out. We'll have more people join in. So coffee and charts. You're talking about value areas. Join in. Awesome. I think we're set. That is going. Okay, fantastic. Everybody, thanks so much. This is great. This is great. So I've got the chats. Also, if you want to join in, I can put this link here. So pin, reply if you want to join. So you can go to the Telegram and check out the invite link. So the invite link, so you can come up and actually talk, ask questions, that whole thing. But until or if we have someone join in, let's just get to the charts. Let's get to it. Here's what we've been mapping right now is kind of this ascending parallel channel. It seems to be holding true. I could see this being really likely. Let me just check, make sure audio is still good. Okay, I could see that it could be really likely that we continue this path and move up. What happens at this halfway point, what happens at the top of the channel is anyone's guess. But definitely seems plausible, seems like something that could happen. Maybe we come and we just have a quick little wick down. We hit 2650 or something like that and move back up. So maybe we go a little bit lower, or maybe we just kind of, move on up out of here. That's definitely possible. We're in this range that we've been expecting to find support. Something, if you've been listening to any of these broadcasts now, it's about probability. And probability works just, if you have a range of, let's say, we're looking at a range of 2717 down to 2600, right? So that's $100 range just over, and that's going to give us a higher probability than if we were to say 2647 and 10 cents, right? Exactly, right? So it's all about probability. And as of right now, the most probable outcome is that we find support down here. Now, here's the challenge. Let's talk about the emotional challenge when trading. We don't want to, we want to remain objective. We want to remain neutral. So we don't want to just be bullish because we're typically bullish, or bearish just because we're like a perma bear, right? We want to be objective. We want to make a good trade. And the market doesn't have to do anything that we think it should do or that we want it to do. So we have to remain objective. And here's the challenge, the psychology. Let's say that we're right and that this line is going to give us a really good bounce. Okay, obviously we don't know what it's going to do, but let's say that that is what's going to happen. The closer we get to this line, the more we start to question ourselves. Even though this is our target, is this not our target? This line is our target, But the closer we get, the more we question ourselves because, oh shoot, the what's going to happen, and are we right, and if I'm wrong, where do we go from here? Do we go all the way back down, right? Um, and so we have to have the chart come down to hit our target in order to be right. But yet we can doubt ourselves and stuff like that. So this is why, first and foremost, the most important thing is risk management. That we don't have more than 1% of our investment portfolio exposed, right? That if we lose or if we're wrong, we're not going to wreck ourselves, right? That we're trading with money that we can afford to trade with, and that we're looking and we're really able to say, okay, this is a high probability trade objectively, right? So let's look and see why this might be a good trade. Okay, there's a couple things. First off, let's look at the weekly level. Look at this. Look at this. We've had this weekly level for a while now on our charts. I mean, I just toggled it on and off. You can see that, right? 27.10. What did we actually hit? What was the low? 27.12 and 85 cents. We got this level within $2.85. That's incredible. That's why we do this, right? And had you taken that trade, potentially, what would that have been? 5%, 5%, almost 6%. That's not a bad trade. That's not a bad trade at all. 5%. That's a great scalp. I mean, it depends on your trading strategy. If you're looking for a swing trade, it could be a good entry, a good position trade. If you're trading ranges or who knows, right? So it's not a bad entry, but even as a scalp, that's a 5%. I mean, who wants to make 5% on your money? And this is, by the way, over 1, 2, 3 days. 5% on your money in 3 days. That's why we do this. That's great. So not a bad level, and we've been looking at this for a long time. I think it's been 2 weeks that we've had this level on our chart because we started the series like 2 weeks ago. So it's fantastic. Okay, let's look at the daily. All right, so 26.18 would be our next level down. Excuse me. Would be our next level down. As far as the daily levels go, we have a monthly, which is much lower. Ooh, I know where I would want to go. All right, I've got a bearish scenario that we can talk about. Okay, but first and foremost, let's talk about where we might find support. So we might find support at that weekly level because that's a big level. It makes sense that we'd find support here. Matter of fact, let's do a quick fixed range kind of look at this. All right, so this is going to put us down 25.86, lower than I was expecting. Let's see if we measure here. Where does that put us? 25.86. Okay, let's go here and let's go with this one. Excuse me. So what I'm doing is we're trying to find points of control. Okay, so it looks like 25. I think this is a pretty good level. So what this red line is that we're seeing here, this is the point of control for a fixed range of candles, right? It tells us this is where the most volume was traded, was at $2,586, okay, roughly. So this would be an important level to look at. Now we want a point of control. You can see I put this white line down here. We have our white line. This is the point of control. This is actually the only naked point of control. And I don't want to get into points of control too much, but basically when we're looking at this, a point of control is where, again, like I said, the most amount of volume was traded in a given area. And so I got this number off of Exo charts, which is another type of platform that I like to use to get volume data. I'll show you that shortly. But when looking at the weekly, this is a weekly point of control that has not been tested. So we should expect a big level, or sorry, a big reaction off of a level like that. Also, if you look at our most recent video, we talked about swing failure patterns, which is where you would take out a substantial low of another candle and you drop below it, and then you get a big reaction underneath it, and then you close above that level, okay? So meaning here, let me turn these off so there's not so many lines. Okay, I'm talking about this red one here. Let me change my cursor as well, just so it's nice and clean, okay? So here would be the bearish scenario. Let me tell you real quick why I'm talking about this. So first off, here's the parallel. So we have decent points of control in this area, about here, a little bit higher, right there. So there's a point of control for this cluster. We're close to that line, so I would think that it would definitely be a likely scenario that if this weekly level doesn't hold, which we got a 5%, 6% reaction from, which is fantastic. If that doesn't hold and we come down lower, we could get a reaction off of this line. We could maybe break that line, hit this point of control, right? So this would be our next area to find support and then move back up, okay? So this is what I think is currently the most likely scenario, is that somewhere in here we move up, okay? Let's go. So here I'm gonna put my actual opinions here. Here, and here. These are the three most probable areas where we find support. So the most likely scenario currently is that we find support here, okay? That gives us the most probable outcome. Doesn't have to happen, doesn't have to do anything for us. And we recognize that and we manage our risk because we acknowledge that, okay? So we will see what happens in here. Now, let's say that we do not get the support that we want out of this level, that it fails, and this point of control, the channel, everything, we just lose it, okay? Meaning, let me get my brush, we come down here and we keep coming down, okay? We don't get support. Where should we look from here? For me, I'll tell you where I'm looking next. Would be in this range right here. So this blue line, I would be looking for a swing failure pattern of this blue line, which means that the candles would come down and break this line, okay? And look underneath it. We have a very large weekly point of control that has never been tested. So I would expect that this would be a great place to get a reaction, and then we close above it, giving us a swing failure pattern, which is another very high probability trade showing that this is likely the bottom. So I would say that if we don't get support at what I've identified as the most probable level right here, okay, or actually it's a little bit higher, right, because we're already potentially in that level of support. So if we don't get a reaction here, then the next most likely scenario would be to get a reaction here. And from that point, we move up. And if we don't get the reaction that we want from there, then we just keep looking lower. But I think this would be it's really unlikely that we continue lower. But we do have levels after that, which would be 2000. So there's a 2000 level there, and another range between and 1700. Okay, so we would start to look at support there because that's our global Fibonacci retracement for the 618, the golden channel. So that's in this range as well. We obviously had massive support here, so there's massive levels there. So we would start looking there. But again, I think the most likely scenario is that we have hit or that we are about to hit the support that we need to move up, and then we're going to keep an eye on it. We're going to see how we do halfway up and how we do at the top, excuse me, at the top of the channel here. That's not a very good line. So we're going to monitor that and see, because maybe we are still going to be heading to lower numbers, even if we come up and we could potentially hit this and then come back down. We could hit this, come here and move up, or keep coming back down, right? So we have to monitor it. We're going to take it one trade at a time. And right now we're looking for the most probable trade, which is still this area. We may have hit it. We may have hit that weekly right here, which is amazing. This is why we put our horizontal supports, because that's really, really big, really, really important. And then if not, we'll look lower. Okay, so that is where the market is. That is our evaluation. We are looking for a bottom. We're looking for a higher low. And this would be a change in market structure to get a higher low here, right? If we break this, then we put in a lower low, which means we're still in this consolidation and not in a uptrending market. If we can put in a lower, or sorry, if we can put in a higher low in this area, okay, this would be our third point, and it would be confirmation of a change in market structure, because I don't believe we got it here. Let me just check. Actually, we did. So technically, I don't know. It's right. I'm still saying that this is that this is consolidation. So we would, if we can put in a higher low, so it'd be lower low, lower high, higher low, higher high. Our third point would be another higher low, and then we could say effectively we have a change in market structure, and we would look higher. We would look to 4,000. I want to see 4,000 ETH get tested. But it all depends on what happens right here, right now, where we're at. So keep an eye on it. All right. Thank you very much for that. Now let's talk about volume areas. Sorry, value areas. I apologize. Value areas. Value areas are where you look at where the majority of trading is happening within any given day or fixed range of candles or time, right? So on TradingView, if you're using TradingView, you can kind of come down to these their forecasting options. Okay, it has like your long position, short position, forecast, date range, price range, things like that. There's a fixed range volume profile. This is what you're looking for, okay? And at this point, or what we have here is you can just pick a range. You say, I want from this day to this day, okay? And you can see this red point of control. This tells you where the most amount of trading happened between those days, those candles. And it doesn't have to be days. It could be minutes. It could be 15 minutes. It could be hours. It could be weeks, right? It's a fixed range. Now, I want to show you how this is set up. 70%, okay? So the value area volume is 70%, okay? So meaning that 70% of the volume is traded within this highlighted section. So there's other charts, there's other graphs, right? And bars and data, okay? These are low value areas. This is a high value area. Let me use a different terminology because we're actually going to be, that actually specifically means something. So meaning that of this range, okay, 70% of the volume was traded in this highlighted area. Now, when I say a value area high, that means this part above. So this top percentage, okay? because it's higher. Literally, it's the higher price, okay? And then a value area low are these candles. It's the lower price. It's whatever lower is. So this is the value area, okay? And when I say value area high, I'm looking for the value area higher than the average, higher than that 70%. Oh my goodness, terrible. Let me just put in 70% block. Okay, so this is our 70% block, and we're looking for the VAL, or value area high, okay, which is this top section. And then of course we have, oh sorry, VAH, value area high, or our VAL, value area low. Okay. So this is what we're talking about. We can expect that when we're taking when we're looking at value area highs, we're looking at value area lows, that we can get a reaction on these areas, that we can expect that because the majority of volume is being traded in this, right, that if it does enter, like these candles did, it did enter into this, right? So it broke below it, that it didn't really want to spend a lot of time here, and it moved back in to where the majority of the trading is happening. Okay, obviously that doesn't have to happen, and doesn't. We break value area lows and value area highs all the time, and find a different value area that we like. Okay, but typically a good value area high or value area low, it's not where there's a lot of volume in there, so it's where the market's negotiating, right? So in this 70%, this is where there's a lot of disagreement and a lot of negotiation happening, where the bears are saying, I want to sell in this area, right? And the bulls are saying, no, this is a good spot to buy, right? So there's a lot of consolidation, there's a lot of price action, there's a lot of volume traded, but you break below this, right? And the bulls are saying, okay, I definitely want to buy this. And the bears are saying, that's not a very good value for me to sell. And then you break above here, right? And it's kind of the same thing, where it's like the bulls are saying, do I want to buy here? And the bears are saying, oh, I definitely want to be selling here, right? So there's less volume, there's less negotiation. The price negotiation is here in the 70% block. This is the value area. And then specifically, this red line is where all of the trading, not all of the trading, but the majority of the trading took place. That's the price point where we have the most negotiation, the most buying and selling happening at that point. So it's kind of cool. So this is really what we're talking about. There's theories that go along with this. There's like, so there's some pretty cool trading strategies. There's I think it's called the 80% trade, which is like, so if you open, okay, so let's say we have our value area. Let me put this right here. Okay, so let's say this is our value area, right? As a matter of fact, let me see if we're here. I don't think that's right. I think we want to be on the 30-minute candles. Yeah, so it doesn't apply, but anyway, I'll still give this to you. It's still important. Just understand I think it's on the 30-minute. I'll have to go back and check this out, but I believe it's the 30-minute. And if you open, so the daily, so the market opens, and you open outside of the value area, meaning this 70% block. So let's say that you open here, that this was our daily open, okay? And you then come back in. So you open outside of it, okay? I think it's 1 candle, 2 candles, and then you come back in, okay? and you spend more time, one candle, two candle, I believe is how it goes. One candle, two candle, then it is an 80% chance, okay, 80% um, probability, also chance, sorry, had a brain seize. Okay, so 80% chance that you will travel the entirety of the value area to the value area high. Okay, so this is a cool trading strategy. If you open up outside of the value area and then come back in and you spend, I think it's like if we're looking at the 30-minute candles, then you would spend an hour inside that range, right? That there's an 80% chance that you're going to travel the whole length of that value area, which could be substantial. Let's just take a measurement of what that would be. So yeah, that'd be like a 14% trade in this example, right? Obviously, I'm looking at the daily. I'm not looking at the 30-minute, but this is a cool strategy, and you can have some successful trades here, right? Again, proper risk management and everything. But if you see this setup, you see that the market opens, which would be like the Asian market is really what we would be looking at usually. So that would be 8 p.m. Eastern Standard Time. You can kind of factor it out for yourself wherever you are. But 8 p.m. Eastern Standard Time, if you open up outside of the value area, whether you're high or low, right? And then you come back in, odds are you're traveling that whole length. So that's a cool thing, right? Also, I don't want to spend too much time on this, but I do want to talk about, I call them nodes, volume nodes, which is, if you look in this really, kind of darkened area, you see like where there's such a big trough, like there's no volume here, right? And then you have a peak, right? So you have a peak and you have a valley. Those can give you good, and not even just in the value area, but even here, right? This is a peak. This is the point of control. But where you have really low volume, low trading, right? You can actually expect potential pricing to change or get resistance here, right? So this is a pretty big valley right here. And it's lower, right? There's a lot less volume going on than the other parts here. So if we had price move up, we could expect that in this area, about this area, that we might have lesser volume, right? So it's kind of cool. This is where we want to really spend some time and understand the value areas, where volume is at within a particular group of candles. So let me show you. So this is kind of weird what I measured, because I measured just a downtrend, from April 3rd down to May 2nd. So just a month, a downtrend. This isn't exactly what you would use this for. So let me map out more so like a realistic scenario here. Let me just get rid of these things. All right, perfect. Where this is really handy is in particular clusters of consolidation, right? So let's look at a 15-minute chart, okay? And we've got some good consolidation here, okay? So this is like our 15-minute chart. So I'm going to pull a measurement from here to here, okay? I don't know what this is, like what are we talking about? So the 2nd of April, okay, cool. But I would say that this is generally some decent consolidation, because we've been within, let's see, so 27 to 28. So it's about 150 dollar range. It's not that crazy. It's pretty sideways. So, and you can change it however you want, but this would be really good to kind of get an idea for some consolidation. Okay. Here, let's even shrink this up more. Actually, let's do this. Let's see how it worked in real life. So let's say we're here. Okay. Perfect. Perfect. So we measure this out. We've got our candle. So let's say we're taking a measurement. All right, where do we want to go? It's just this. We can't. Let's say we can't see all of this information. So all of this information we don't know about yet, right? We're just looking at this. We're seeing value area low, seeing value area high, right? We see this point of control right here. And so we can kind of maybe look and see where we might be going. So we could see, I think this wasn't so it wasn't too particularly helpful with understanding that we might be going lower. Like this isn't what you would be using, other than you definitely, when you got rejections off of this value area low, right? When you broke below it and you came back up and then you got rejected again and then it was resistance, you would be really bearish here because you're under this value area low for a previous point of consolidation, and there's probably other factors, but that clearly wouldn't be very good. And then we fell off a cliff, right? We come back up, we hit this value area low pretty closely again, and we get rejected. So again, feeling pretty bearish, but this would be a good point of resistance that we could see, right? I'm gonna see if there's anything else right here that really happened. Not too much. Okay. We come back up. We travel. So that's really interesting. So we travel the whole length of this value area, basically. I mean, very, very close. And then we travel it all the way back down and we lose it again. So that's no good, right? We come back up and then we break above it. So now, okay, this is very cool. So now this is our value area high for that. And it's just like, obviously there's going to change. Like there's value areas here, like we could change different measurements, but we're just looking at how these areas factored in over time. And we could see we broke it, and now support and support with this value area, right? Which would also be like a horizontal level of support. And so we would be feeling like the bullish trend is probably going to continue, and we move back up and we lose it. We come back down and we hit this again. What a pain in the butt. And we get support and we lose it, right? So it's just been, yeah, it's been a big fight. I love this area. I want to do a whole measurement for this area. I think it's worthy of taking a look at. So right here. So let's map this out. That is our value area low. So here, let me just mark this here. So VAL, value area low. Okay, that's our value area high. So VAH, 70% of the trading is happening here. This red line, this is our point of control, right? So we'll put this here, make this red. Say this is our point of control. Roughly, I mean, these are not exact, but very close, right? I would put a line here, make this white. I'm going to say that this is a low volume node, okay? Because there was such low volume when it came down to here, so not a lot of trading, And there's not much else that I would really want to highlight. Okay, so taking a look at this, I would be really interested to see what happens. See if we could build some support above 2840 and move up, right? Or see if we keep getting rejected at this lower volume, which it looks like, I mean, just on this 15-minute candle, like we're getting rejected right then. Doesn't mean that we're not going to take it in a minute. But yeah, so this is really cool. This is how you build kind of like this volume profile and see, you know, where we come into things. So yeah, it's really, really exciting. So let's say today, later today, because this is our value area. Well, we want to say we would want to change it for the daily. Never mind, I'm not going to do that. So anyway, I hope that this is helpful. Let me show you real quick this. Let me screen share. I got to stop screen sharing that. There's got to be a better way to transition. I'm just learning how to use this still. So let's go to Exo charts. Okay. This is one of the things I like to show. I'm going to turn this off though. All right. Each one of these are days. These are daily candles. Okay. And their volume profiles. So we would look at value, like the value area. So for today, so far, and this is like the same thing. So this is like, let me actually just check. I think it might be 65%. Okay, I want to get the settings. Yeah. Okay, so on TradingView, we had it set at 70%. Here, outside VA capacity, we're just going to change this to 70. We're going to change it to 70. Cool. All right. And you can toggle on your value areas, right? So we got to toggle on the value areas. This is where 70% of the volume has changed. This red line is our point of control, like before. Let's change this to 100 ticks. It's going to give us, actually, let's do, I like 50. 50 is good. Oh, 50. So we are well under the daily value area. Okay, so the value area right now for today is 27.9750, right? We're underneath that a good ways. So let's say that we have that we stay here, okay, and then the new day opens in 5.5 hours, and we close or we open outside. So meaning we open below 2797.5. So we're down here. And then we move price back in and we hang out above 2800 for 2 hours or an hour. There's an 80% chance that price goes to 2840, right? So what does that mean? Let's say, so 2800 to 2840. Okay, so that's not that big. That's like 1.5%. Not a bad trade still, if you're scalping. But yeah, that's not a very big range. There's clearly bigger ranges. We could see like this is a much bigger range. So like 2840 to 3022. It's a much bigger range. So it does depend, but still 80% chance that you get 1.5% in your favor. So we'll see. But you can tell that the difference for TradingView and Exo charts, the reason why we have the difference is because this is for today, and my value areas are not for today. If I did it just for today, we're going to be pretty close. So we're the 2nd of May, so we'll go right here. Let's see. So the value area that they have is roughly the same, 2804 and 2844. So we're off by like $5 on each of these. So not too bad. So you can get some pretty good accuracy with TradingView as well. So even if you're not using exocharts. But I like exocharts. If you want to get really precise, exocharts are the way to go. But yeah, I just want to point out again this weekly level. This is really cool. Like we came within $2.85 of our level. That's a win. That's a big win. And we can see how these lines are very well respected. A lot of play off of them. So it'll give you an idea. Points of control, naked points of control, meaning it hasn't been tested before, right? So like here, let's get rid of this real quick. Let's get rid of these lines. Let's say we wanted to get this, okay, this line right here. So this 2734, this is a naked point of control where you have for this candles. And this is a 15-minute chart, so you're talking about a couple hours. That's not a lot of confidence. That's not a lot of data. But let's imagine that we weren't looking at a 15-minute chart, but we were looking at a daily chart, for example. This point of control is likely going to give you a big, like a lot of play. So if the candles were to come down and hit this, because this hasn't been tested yet, because we're constantly higher than that, right? It should give you a pretty good reaction, which is really cool. So anyway, that's points of control, value areas, both highs and lows, low volume nodes, and it is just another tool to add to your case, right? Your toolbox. And again, we look at this stuff. We're understanding technical analysis because there are other people also looking at it, right? So that helps us find out where investors are, right? If we're able to look at this and say, okay, 70% of the volume is being traded in here, that means that 70% of the investors, traders, buyers and sellers, they're also right here, right? They're in this range. Has to be. At least 70% of the money, right? That's what we're looking at. So it tells us where we're at, right? Tells us where to look. So anyway, I hope that that's helpful. I appreciate the time today. Thank you very much. And you have a lovely day.